Welcome back. Well, the STX Nifty is indicating that we'll have a good start, and of course, the Asian market is also, as of now, doing well. But let's see how things move. Prakash Diwan is now joining us. Prakash, good morning. So let's discuss auto stocks first. Good sales from both Maruti and Hero, but how much of this is now in the price?
Good morning, Anuj. So to be honest, the monthly sales numbers for auto, particularly for Maruti, is just an extrapolation of the kind of estimates that were floating around from the Navratri season sales. I mean, we did hear of this 95,000 vehicles being sold and stuff like that. And the rest of the month is probably added to this 1.8 lakh crores. But, what I'm trying to figure out is that can we take this 1 month buying or this number as evidence of a longer term trend change, and whether this would kind of pick up. And in fact, Mr. Bhargav, when he was on your channel, also kind of shared the fact that there is a little bit of a stress in the urban buying pattern, and then it's more rural that they're anticipating. Probably this could kind of peter out sometime into December first half, and people then kind of defer decisions to buy vehicles. So I don't think, because of this number, of course, it has been record breaking and there are lots of new highs that these sales numbers have clocked. But to the stock, I don't know whether this could probably add momentum, or you should be buying or chasing Maruti as a stock or a Hero MotoCorp after these numbers. In fact, quite a bit of it would be priced in with a little bit of hesitation. And so you might see some initial enthusiasm, but that might not be very sustainable.
Even on Hero Moto, Prakash, good morning. Thank you for being with us. Hero Moto is a solid 35% increase in October sales, but we got a very different, this sounds like a contra note from Credit Suisse saying that their share in registrations is slipping and their costs are piling up, so they worry about the Q3 margins. What about you? At 19 times is what they are pricing it. Is that still buyable or not? Hero Moto.
So, good morning, Lata. So, Hero MotoCorp as a segment is probably something that might, and we've been talking about this whole thing that two-wheelers, especially in the semi-urban rural markets, would probably have the headroom for growth much more than urban areas. Hero MotoCorp, by the constitution, the product mix that it has, the kind of presence that it has, could probably still see some sort of a follow-on improvement in numbers, but it's already run up. See, most of these stocks have run up in the last 4 months in anticipation of a recovery, and that recovery is what we are now seeing. So all these numbers do is corroborate the fact that these stocks were expected to do well, and that's why you see Eicher hasn't clocked those kind of numbers, or even a Bajaj Auto is struggling on the domestic side to some extent. So I would believe that Hero will continue to do better than the others, but whether they can continue to repeat this performance month on month, even for 2-3 more months, is a bit questionable. So I do agree that it's probably a lot of restocking, a lot of channel filling, as they call it, which can suffice for these improvement in numbers, and we'll have to see whether this trend continues beyond November as well.
Okay, that's the most important thing, right? Once festive period is over, what the normalized trend is will be reflected in the stock. But Prakash, I wanted your thoughts on Reliance. Of course, we know that it's the lower tax that has boosted the profits this time. But for a long-term investor, what do you do now at this price?
Sonia, Reliance is a bit tricky now. In the absence of any triggers, it's kind of difficult to believe that the stock would cross its previous highs of 2359 or whereabouts and start getting into a slightly new trajectory, because this was anyways a zone that we had not anticipated it would move to so quickly. But if there were some, let's say, announcements, one is, of course, the negative headwinds that are still, the dark clouds on the litigation that's still in the offing, that gets away, or you have some sort of announcement that come on the O2C business, some kind of carve-out that gets initiated and which has a time-bound nature about itself. There could be some sort of interest to continue that momentum. But otherwise, in the absence of new triggers, would you be in a hurry to buy Reliance? The answer is no, because if there is a sell-off in the market, whether it's triggered by foreign overseas cues or the US election, you don't know, but that could probably be the victim of a little bit of a sell-off and lightening of position. So I would believe people would want to wait for Reliance to stabilize at some lower levels before a new wave of buying comes in, because there's a lot that's happened. There's a lot that the buying that's happened in the last 3 months. But I think the news flow will decide that more rather than the numbers don't give you that confidence that it could kind of race ahead very quickly. Maybe there's a little bit of a bump up if everything looks good. There's a momentum in the market, but I don't think it's leading the rally of sorts from here on. It could probably be an underperformer if markets do look up in the short term.
Okay, in fact, let's get another view on Reliance. We have Jal Irani also joining us now, Senior Vice President, Institutional Equities Research at Edelweiss. Jal, good morning. Thanks much for joining us. What's your reading of the Reliance numbers, and have you changed your either your rating or your target on Reliance after the results?
So I think for Reliance, after a very difficult first quarter, they were, I think, doing very well to recover into the second quarter. Nevertheless, the recovery is mixed, and largely rather difficult times still persist. Clearly, quarter on quarter the EBITDA is up 12%, but year on year the EBITDA is still down 15%. Now, in terms of we have maintained our target price or recommendation exactly as it is. At this moment, we see no reason for to change the recommendation. So we've maintained things as it is as of now, and essentially the results have been otherwise exactly in line with expectations. So no reason to change anything.
Good morning, Jal. What is your price target now?
It hasn't changed. We are at 2,105.
Okay. And where do you expect the next leg of recovery? Will it be in Geo, or do you see prospects in retail? Where might the growth triggers be?
So I think, firstly, the petrochemical division is reviving fairly quickly. We've seen a demand surge back both on end product export demand, especially on the polyester side, as well as some festival buying. So utilization rates there, especially domestically and to an extent even globally, have recovered. Retail, of course, of a very low base. You will recall that in the first quarter, the EBITDA had halved, and to that extent, we have seen a doubling in EBITDA quarter on quarter, and that should also continue into this quarter, especially because of the festival season. Nevertheless, I think on retail, the thing is that the margin recovery is slow because Reliance has been focusing on grocery, where the margins are relatively very, very thin, while a very large portion of the sales have been happening in essentially consumer durables, where, of course, Reliance on the offline, basically the physical store business is very strong, but internet sales in that they're just starting to do in a meaningful way.
Okay. Right.
I think it's petrochemical and retail driven.
Sure. Okay, petrochemical and retail driven. Thanks, Jal, for joining us. So that's the word coming in on Reliance Industries. As Jal Irani of Edelweiss saying, perhaps a lot of the good news is already in the price. But getting back to tracking other numbers, Prakash, I wanted your thoughts on UPL. Looked like a good set of numbers this time around. Revenue growth of 14%, EBITDA growth of 17%. Do you like this stock?
So, that's a difficult question. The numbers, yes, can't deny the fact that there is improvement. And remember, this sector is very promising. It just gets more and more promising. And UPL has managed to consolidate a lot of its global footprint. But, as a stock, I'm not too sure whether we are out of the woods in terms of the question marks that still surround it, especially, the last trigger being the KPMG incident. And then whenever you have these inorganic growth, very aggressive inorganic growth patterns, you always have questions in terms of these M&A transactions. There's lots that's hidden, which probably people still need to kind of know. So the transparency levels are something which are still circumspect, and that's why the stock kind of always has this lid. But I think these numbers do tell you that the stock is in a good spot. The sector is promising enough, and if they continue to get this kind of strength from earnings, which are absolutely more dominant than any other perception, there could be a change or a re-rating of the stock and it could move back to its 550, 560 zones. So there's still some time. If those numbers get convincing in another quarter, I think things could change dramatically for the stock.
Okay, Prakash, we have to get into a break, but we have lots of mid-cap companies to discuss with you. So many banks, brokerages, and other companies, consumer durable companies. Do stay on. We have to take a break, but to viewer, information, you can catch an in-depth coverage of US elections from ground zero as CNBC TV 18 gets you the most influential voices on the world's most important election. There's a big one coming this evening. So stay with us. Also, of course, after this break, our technical experts will join.